Welcome to RANsquawk's morning briefing for Monday, the 1st of February 2010. In terms of the Asian session, did see some renewed fears of potential Chinese central bank monetary tightening. Some comments out of the think tank, the Development Research Centre, and analysts there suggesting that the PBOC could well raise interest rates when the CPI inflation rate goes in line or above the deposit base rate of 2.5% or around that level. Given in mind the CPI at the moment stands at 1.9 on a year-on-year basis in China. That did put the Shanghai Composite closed down around 1.6 and the Nikkei was broadly flat for the session. So in terms of UK and European bourses, we opened a little bit lower, but since that opening we have continued to tick higher, being led in particular by utilities on a sector basis. That was after UK press this weekend suggested that Northumbrian Water, a smaller FTSE 250 firm, has had interest on potential takeover from a Canadian pension fund for around £1.7 billion worth. That has lifted and seen some outperformance in the FTSE utilities, and utilities up across the European sector. And we're pretty much in minor positive territory now in the FTSE CAC and DAX. Also getting a boost for some of those prices has been the Eurozone manufacturing PMI, that headline number coming out at a 2-year high, as well as a big surprise for the UK manufacturing PMI, which came in its highest since 1994. That though has failed to lift the pound in the currencies, which is down over 100 pips so far this morning. That being led predominantly by a lot of weekend press suggesting in their latest polls that the UK could well be heading for a hung parliament in the May 6 elections this year. That, as well as people look ahead to the Bank of England interest rate decision, quite a lot of weekend pieces suggesting that the MPC may well be split in their decision on what to do with the quantitative easing programme, which has now finished on that 200 billion purchase. The shadow MPC, closely followed from the Sunday Times newspaper, suggested that some of those members had indeed looked for a further increase of QE, 3 of which wanted 50 billion. Taking a look then in terms of more US related news flow, it is worth noting an FT interview with Fez Bullard, who said the United States has escaped the danger of a Japanese-style deflationary trap, but it is not yet time to start tightening policy. He also added that although it's not time to tighten policy, the FOMC would weigh factors other than inflation and unemployment, and factors to consider would include asset bubbles. Elsewhere as well, later on in the session, when the US come into the market, we'll be looking out for the US President Obama to outline his latest budget proposal. The White House will predict a $1.6 trillion US budget deficit for 2010 fiscal year, a fresh record and the biggest since World War II, as according to a congressional source late yesterday evening. Obama's budget proposal due at 10 AM Eastern, so 3 in London, will predict a narrowing of the deficits to $700 billion by fiscal 2013, before they gradually rise back to $1 trillion by the end of the decade, according to a Capitol Hill source. Looking forward then, in terms of the US data before that, we will see personal income spending, the PCE numbers, and we'll also be looking out for the ISM manufacturing report. And in terms of US earnings today, the one of note will be pre-market, and that will be ExxonMobil.